they have termed this past earnings as a modest quarter because, autos did pretty well. The cyclicals didn't do too well. So let's give you a couple of numbers out there. Now, for the Nifty itself, well, the earnings growth for the past quarter was around 11%. Motilal is working with a growth of close to around 14%. So in that sense, it missed estimates by a little bit. But for the 9 months, well, we've had pretty strong mid-teens growth is what we've seen on a year-on-year basis. And the profitability, why did it moderate in quarter 3? Because banks, financials, they fired, autos did pretty well. And some of these metal stocks, well, they underperformed. Also, there was a broad-based slowdown that was seen in consumption. Whether it was staples, whether it was discretionary, both of them were a bit of a pain point. Now, the BFSI space, that did very, very well. And ex of BFSI, actually, there was a larger than expected decline. Because the decline ex of BFSI is to the tune of close to around 14%. They were plugging in a decline of close to around 3%. So that clearly hurt. Now, what does this do to the Nifty EPS? Well, for FY23, they have scaled it back by close to around 1%, not too much out there, scaling it back to 812 rupees from around 820 rupees odd. But they're keeping their targets for FY24 intact. That would mean it's a taller ask. In FY24, you'll need to see a bigger growth out there. And the EPS estimates they're working for FY24 is close to around 990 rupees odd. So we've got a tall ask actually from here on because the base as well is higher. But let's see how this one goes.
Okay, well, you know what? This is, of course, the big theme, right? The earnings downgrades and the bit of disappointment that we've had. Let's go across to our guest, Prashant Khemka, the founder of White Oak Capital Management, is joining in. Prashant, welcome to the show. What are your own thoughts on how earnings season has panned out? Do you see more downgrades and upgrades? And if yes, what are the kind of sectors that you continue to be bullish on post the earnings season?
Hi, Sonia. Thanks for having me here on this panel. Thanks for the question. So I think as the chart or the data just showed, yes, a lot of companies outside of BFSI had very robust results, but outside of BFSI, there were, in this quarter, a couple of things going on. See, inflation in raw materials has been coming down, but a lot of the companies had higher priced inventory, raw material, which were bought in earlier quarters, which they're working through now. But in their end pricing, they have to reflect what is more in line with current raw material prices. Yeah. So the prices are lower, but RM prices that they're using from the inventory are still higher, and hence there is a margin compression, but that is a one-off margin compression. That's what the companies are saying as well, and it should normalize for most of them some point during this fourth quarter, or for some companies in the first quarter of next fiscal year. So that's been one of the key reasons for lower earnings for many of these companies. The other reason, more fundamental, yes, there has been it seems some slack in consumer demand. And that's across urban areas as well as rural areas, but maybe a little bit more at the more economy end or the value end. Because the impact of inflationary pressure is felt more at that economy or the value end of the curve. So for those two reasons, earnings have been softer for different market corporates in the market.
Okay, well, stay on, Prashant. We'll come back to you. There was another big story this week, and it's a deal that we told you was in the works, and it finally happened this week. Auto component major Minda Corp acquired about 15.7% stake in its rival Precol. Remember, CNBC-TV18 had reported earlier in the week that Minda was on the prowl for a stake in Precol through a reverse book building exercise, and that happened. Nimesh, you were the one to tell us. But, so much to and fro. We thought it would be a takeover battle. Yeah. Finally, it's just a, financial stake. But tell us a lot more about what you found out.
Well, Sona, it's too early to say it's final. This is just the first step, according to me. So in the first step, Minda has acquired 15.7% in rival Precol. They've paid 400 crore rupees. So I guess even the Minda investors are going to ask the management on what is the rationale behind it, spending 400 crores for a minority 15% stake in a rival company. So that's something we need to see further. In fact, Minda has gone on record saying that this is just a financial investment and they should be treated as normal investors, what the other shareholders are. But I guess there is a road ahead for this deal, so to speak. and that's what we'll have to track very closely. I was looking at the shareholding pattern of both these companies, Precol and Minda Corp. In Precol, the promoter holding is very low at just 36%, so that's going to be a big risk for the Precol promoters. The mutual fund holding is 4%, FI owns close to 12%, and there is a private equity investor who owns 5.7%, which is PHI Capital. And interestingly, that same fund owns 5% in Minda Corp as well. The disclosure will be important as to who are the large funds who participated in today's reverse book building and given 15% stake to Minda Corp. The next step could be whether they will go and talk to Precol promoters and ask to buy them out, and whether there will be an open offer as well. So that's the second step to watch out for. I guess it's going to be this is just a start, is what I understand. Need to see how things pan out. But I guess Sonia, you've tracked the sector so well. What are the key synergies that benefits? Because I was looking at the balance sheet of Minda Corp as well. I think they've spent most of the cash that they had in today's 400 crores.
Yes.
But the fact is, for a 2,400 crore market cap, even if you reach to 51%, they need 1,200 crores. Do they have enough cash to fund this and take this over?
In fact, on their books, Minda Corp has just a little over 300 crores, which is hard cash on their books. And as you said, that's not even enough to fund it.
True.
But give and take everything, I guess, from the accruals that came in Q3, etc., they would have made that amount available. But I think it's a strategic fit for them. They eventually, whatever they plan to do with Precol, whether it's a hostile takeover, whether a complete acquisition, Precol is a very strong company in, these instrument clusters, which are the various displays and indicators that are used in a car. And Precol is the second largest global player in this instrument cluster space. They also provide fuel level sensors for 2- and 3-wheelers. So it's a very strong business. In the 9 months period, the earnings have also picked up quite a bit. It's a debt-free company. Not just that, they have a 50% market share in 2-wheelers. They have a 70% market share in commercial vehicles. They also do various things for electric vehicles. They provide connected vehicle solutions, telematics, onboard navigation. And as we know, this is a space that the Minda Group is very aggressive in this whole EV space. Not just Minda Corp, Uno Minda as well. So in that context, it's a strategic fit for them. Now, there are, of course, many positives. Precol has free cash flow of about 100 odd crores. So in a sense, this is a strategic fit for
Minda. What could be the
Minda.
merged entity look like? I mean, if they combine together, eventually if that happens, what could be the merged entity look like, and what could be the key benefits for someone like a Minda?
So, as I said, Minda is already available. They already provide instrument clusters. Now, Precol will be adding, of course, their own geographic as well as domestic reach to Minda Corp. And the combined